renowned global macro traders, people like Raoul Pal, Mark Yusko, friends of the channel, use the framework of seasons when referring to the cryptocurrency market. And I want to investigate this theory because could crypto summer be canceled? And indeed, if we look at the charts, it is impossible not to spot a seasonality in price moves. The current year of 2024, of course, is a summer year. What does that historically mean for prices? And is there a possibility of a bearish summer? I mean, the actual northern hemisphere summer, coming into winter here for us down in the southern hemisphere. But that's a different story, right? June, July, August. What can we look at looking at historical data? Well, here's a multi-year chart from Raoul Pal. As you can see, each year and the crypto market represents a season. Obviously, winter is the bear market in which the price of Bitcoin and all other coins fall off a cliff. Spring is the year in which prices find their footing and thus resume their uptrend. That was 2023. And summer is the time when the uptrend continues. Fall is the parabolic phase, the blow off top, probably 2025. And if you look a bit more closely at the pattern, you will see that some seasons have been more consistent than others and how they actually behave. For example, the bear years in blue have been pretty gosh darn consistent in their bearishness. From 2014, we have minus 57%, 2018, minus 72, 2022, minus 65%. Oh, there's some good memories baked in those numbers, isn't there? For spring years in green, it's been up 38% in 2015, 90% in 2019, 156% in 2023. 2015, with its modest gains, is the outlier there. The summer years then, 190% in 2012, 123% in 2016. 2020 saw 300% up only consistently. And the current year of 2024, which is a summer year, was off to a hot start with a more than 50% price spike from January to March. Only when we look at the fall years, the image gets a bit more mixed. An insane pump of 5,400% in 2013, 1,300% in 2017, but only 63% in 2021. It's the fall year of 21 that saw a rather weak pump for us spoiled Bitcoin investors who are always expecting mega moon time. What about altcoins and altcoin seasons? How do they relate to the bigger cycles in the market? Well, let's look at the price of altcoins measured in Bitcoin throughout the seasons. We know altcoins get absolutely trashed in crypto winter, like beyond trash, thrown in the gutter and had someone take a crap on them and then lights it on fire. Bad stuff, right? But what about summer and fall? Well, this is the chart of dominance of crypto coins outside the top 10. So everything excluding Bitcoin, Ethereum, and the other top 10 altcoins like BNB, XRP, Solana, whatever. As you can see, crypto summer years kick off alt season. But for altcoins, summer years can feel more like spring, meaning there are occasionally some very cold showers with sharp price drops. Again, relative to Bitcoin especially. Just look at 2016, look at 2020. In both years, alts did not outperform Bitcoin that much, measured from January to January, even though there were quite large spikes. Only in fall years do we really see strong, consistent uptrends for altcoins. The fall years are the true alt years where things get insane for altcoins, even compared to Bitcoin. New coins pop up that do like 100x moves, Solana in 2021. Now, before we talk about the causes of the seasons, I just want to take a real quick moment to let you know about the Wealth Mastery newsletter, the best damn newsletter in the crypto business. My team and I work very hard every single week to bring you the best and the latest opportunities in the market, okay? The things that are shaking the market. Let us save you your time and help you stay ahead of the curve with the latest news and alpha on altcoins, meme coins, DeFi, charts, and much, much more. You can use the link down below in the description to join our 125,000 plus weekly readers for free. Check it out. Thank you very much. So, what causes the seasons? So before we look at the current price action, try to forecast out a bit, let's turn to a broader question. Why are crypto prices so damn cyclical in the first place? Compare crypto prices, of course, to other assets in a multi-year uptrend, namely technology stocks. The FANG stocks, have also moved in a super cycle type of pattern, meaning that they stay in their channel when plotted on a log chart, at least. Now, here's Amazon, For an example for you, it's not cyclical. Bitcoin also is in such a channel, but the moves are more cyclical, as we saw. Well, why? Well, you probably know the answer, or at least you have one of the answers already probably floating around the back of your brain, which is, of course, the Bitcoin halving. This is the price chart of BTC all the way since 2010, also shown on a log scale. If we smooth out this chart a bit and plot the halvings, the dashed vertical lines, we see that the big run up and blow off top has always happened in the year post Bitcoin halving. Well, the halvings themselves have been in 2012, 2016, and 2020. The violent price action has been in 2013, 2017, and 2021. Those are all fall years, by the way. While a statistician might scoff at a series of three, it's not enough for real statistical significance yet. But with the Bitcoin halving in the back of our minds, remember, it did just happen this year, right? So it's interesting that we can see a pattern starting to emerge here, even if critics argue the halving isn't as important anymore as it used to be, which there's some valid points to that with everything else going in the crypto space. And the first halving in 2012 meant a huge supply shock as the supply was cut from 50 BTC to 25 BTC per block. The most recent halving was from 6.25 down to 3.125, much smaller in absolute terms. Okay, only a little more than 3 BTC, but total dollar terms, pretty big. So why are we still in such a nice cyclical pattern? Well, you could argue that the first halving actually set in motion a pattern. It set in a pendulum, basically, into motion, so to speak, anyway. And it could sustain this by giving smaller and smaller pushes. Compare it to setting your kid in motion on a swing. It doesn't require a lot of pushing to keep it going once you've set it into motion. But there's another explanation, and that is one that we will keep in mind for the coming months. More on that in a moment. But it's the relation between money and supply growth and asset prices. So you need to understand this first. Central banks, in response to stagnating growth and high debt levels, have resorted to quantitative easing, QE, which significantly impacted asset prices. This relationship became particularly evident during the 2008 financial crisis and the subsequent economic recovery periods. Now, I already mentioned Raoul Powell, who talks about the everything code. I love the everything code thesis, very interesting. This is his thesis that central bank policies have their own roughly 4-year cycles, with the money printer being switched on each cycle to pay for the interest on debts from a previous cycle. These liquidity injections, these liquidity cycles push up asset prices, and they work on approximate 4-year cycles, including even like the Chinese central bank. It's crazy. Indeed, looking at this graph from macro, micro, there seems to be a correlation between the periods of low or even negative M2, that is money supply growth, and bear markets. That was the case in spring 2015 when the M2 growth was negative, whereas the summer and fall years of 2016, 2017 coincided with M2 growth peaking, coinciding almost perfectly with the infamous 2017 blow off top for Bitcoin. Money goes out, prices go down. Money goes in, prices go up. Same with the post-COVID injection of liquidity. Appears that by coincidence, of course, the Bitcoin halving cycle has sort of aligned with the liquidity cycles. Makes you realize Satoshi is even more of a genius than we give him credit for. Now back to our question. Will we get a bullish or a bearish phase of the market in the coming months? Because this is the big picture you need to try to understand, right, about the cycle. But what about the coming months? Based on the previous cycles, our base case has to be that we are in the middle part of a bull market, that we will see significantly higher prices over the next year, year and a half. But the road there will be bumpy, and you should anticipate that. Looking at the current M2 growth, we can see it's relatively flat. We are having printing from China and Japanese central banks, for example. Maybe that explains a bit of the weak price action of the Fed. The Federal Reserve in the USA hasn't really jumped on the party yet. Keeping an eye on money supply charts, of course, will give you a valuable anchor point. Remember, the Fed is going to start buying back bonds pretty soon, so things are happening. Now, two slightly bearish scenarios for the coming months. Scenario one is that we're just in a normal correction. And in the coming 2 weeks, we end up bottoming out in the low 50s or so, for example, just the theory, right? Scenario two is that just a longer period of weakness ahead of us, with price moving sideways for another 2 to 4 months. That's kind of what happened in 2020, by the way. That would bring the cycle back to the previous bull market, really, in terms of timing and how it works and total structure and all this kind of stuff, with the spectacular part of the bull market not starting until about 6 months after the halfway point, or 6 months post Bitcoin halving. Of course, there are more extreme scenarios on either side of this, both bullish and bearish. Still, people saying we're going down to 12K, right? And people saying no, super cycles here, we're going up way faster than you think. Maybe resume the uptrend much sooner, right? Or the bears, the macroeconomic outlook's just so bad, it's going to deteriorate rapidly in the coming months. Global recession's coming, bond market crisis is coming. Look what's happening in Japan. Geopolitical escalation, World War III is coming. It's all over. Doom post now. Yikes. You can never know for certain what's going to happen. Okay, no one has a crystal ball. For Bitcoin, the biggest strength may still be that of global liquidity, which has been on the rise since basically the market bottom. That is the degree to which, of course, players in the financial markets have room to take risk. And it looks like that's going to continue going up for some time. And it's not easy to measure, which is why many analysts use a proxy, a relatively simple figure that gives a nice idea of the underlying complexity. For example, central bank balance sheets or the money supply. You see, we think there is a good chance that sometime in the next few months, Jerome Powell, Janet Yellen over the Treasury, that they're going to significantly increase liquidity in the markets. They've said as much again with the bond buyback program that's likely to happen soon. When, what way, with what arguments, they'll figure it out. But Bitcoin will be the first to catch on and to take off like a rocket in that scenario. And just remember that even in crypto summers, there can be nasty, stormy days in which you want to, stay inside during the heating on, relax a little bit, especially for your altcoins. Okay, be ready for it. Looking at our actual summer, meaning the months of June, July, August, for the Northern Hemisphere, it's winter down south. Anyway, quite possible that the current cool-off phase will continue for a little bit if previous cycles have any kind of indication. But the tried and trusted 4-year seasonality overall suggests a continuation of the bull market with high volatility. Money supply growth can really only go up from here. Powell and Yellen will probably increase liquidity in the markets over the coming months. Bitcoin ETF demand's not disappearing overnight, is it? It's only going to keep going up. It's Hong Kong, South Korea, everyone else come on board. The Bitcoin halvings here, all that kind of stuff. Even if a few cooler months are ahead, does it really matter? Just enjoy the breeze, man. Thanks for watching.